Get ready, folks. The Bank of Canada has a big decision to make on October 24th, 2024. It's all about interest rates. Will they go up? Will they go down? Or will they stay the same? This decision has huge implications for the Canadian economy. Last time, on September 5th, the BOC decided to keep rates steady at 4.5%. This was a bit of a surprise for some analysts who were predicting a small cut. But the BOC is playing it cautiously, folks. They want to make sure inflation is truly under control before making any big moves. This upcoming decision is a nail-biter. The BOC is walking a tightrope, trying to balance economic growth with keeping inflation in check. It's a tough job, but somebody's got to do it. And believe me, everyone will be watching. So, what are the bigwigs at the BOC looking at? What's keeping them up at night? Well, inflation is public enemy number one right now. It's still higher than the BOC would like, which puts pressure on them to raise rates. But wait, there's more. The job market is also a key factor. Right now, Canada is enjoying low unemployment. That's good news, but it can also push wages up, which can lead to, you guessed it, more inflation. And then there's oil. Canada is a major oil producer, so the price of crude has a big impact on our economy. If oil prices rise, the BOC might be more likely to raise rates to keep inflation from running wild. Now let's talk about the loonie, our Canadian dollar. The BOC's decision will have a big impact on the CAD, especially against the US dollar. It's all about interest rate differentials, folks. If the BOC gets hawkish and raises rates, the Canadian dollar could strengthen. Why? Because higher interest rates attract foreign investors looking for a better return. But if the BOC goes dovish and cuts rates, or even keeps them steady, the loonie could weaken against the greenback. Lower interest rates make the Canadian dollar less appealing to foreign investors. Section 4, implications for investors. So, what does this all mean for you, the average investor? Well, the BOC's decision could impact your portfolio, especially if you're invested in interest rate sensitive sectors like real estate or financials. If rates go up, it could put pressure on those sectors. Why? Because borrowing costs increase, which can impact profits. On the other hand, if the BOC cuts rates, it could give those sectors a boost. Lower borrowing costs can stimulate investment and spending. It's a delicate dance, folks, and you got to stay informed. Section 5, the market awaits. The bottom line is this. The BOC's interest rate decision on October 24th is a big deal. It will impact everything from the Canadian dollar to the stock market to your own personal finances. My advice, stay informed, good people. Pay attention to the economic data, and most importantly, stay connected to news moves. Mark Forex TV for all your central bank insights. Don't forget to like and subscribe to the channel. The markets will adjust, and we'll get through this together. Just remember, knowledge is power.